videos I polled everybody on what you guys wanted to hear about, learn about, and this was the one. So win rate gets a lot of attention. So you'll probably clicked on an ad to find us that said we have a great win rate, and that is true. But there are also plenty of people that have great win rates that lose money all the time. We are not one of them, but it does happen. And I'm about to show you why. So expectancy and profit factor, that's what actually builds an account. So win rate matters because if you have a terrible win rate, you might be dumb, or you might just not know what you're doing. But it's just the first question. It's not the most important piece. Oh, thank you, Bubba's. You're the champ. Um, and we show it because, like I said, it proves repeatability. It proves that we have some experience, and you can hold us accountable for something there. But like I said, it's not the most important thing, and it's definitely not the only thing. So it's useful proof, but it's an incomplete verdict, essentially. And it does help separate a real process from somebody who just gets lucky. But you could have a 10% win rate and be the most profitable trader on the planet, or you could have a 95% win rate and be a loser still. And so 90% winning trades, right? Something like we have sounds incredible. But if our average winner was only 5% and our average loser was 100%, the expectancy would be negative 5.5% per trade. So nobody wants to be losing 5.5% per trade with a 90% win rate, but that is definitely possible. Winning is not the same as winning mathematically. So winning a play or winning a trade is not the same as winning the math game here. So expectancy is what one trade is worth on average. So of all of our trades, if you average them out, the questions I don't get enough of are what are your profit factor? What is your expectancy? What is your lot size? Those matter a lot. And how much money did you make last year? What was your return on this? What's your win rate of this service and that service? Those questions matter very little. And so I think somebody else in the chat actually said it today. They were like, you guys are kind of asking questions like some gambling amateurs. And they said what I was thinking, which is not my goal. So my goal for these services has never been to just give you guys free money and just teach you guys how to print money. That is a great thing if I could confidently do it. But what I can more confidently do is teach you how to trade, teach you how to be profitable traders, teach you how to have a profitable mindset, teach you about having the right expectancies and profit factors and what to look for in those more so than if you added this percentage of your account, then you'll get this return. And like that's all great. But it's all backward looking. And you want to set it up so forward looking, you have the right expectancy. So a positive expectancy makes money over a large sample size, and a negative expectancy loses money over a large sample size. This is why I often tell people, do not judge me on one trade. Do not judge me on 5 trades. You can judge me on 100 or 500 trades. I will happily be judged on that. And then profit factor asks, do wins outweigh losses? So if you have 8,000 in profits and 2,000 in losses, that's a profit factor of 4. Basically, for every dollar you put into a play, what are you getting out of it? That's your profit factor. So if you put $1 in every play, you get $4 back over time, not instantly. But a lot of services, so somebody asked me, Manny, it might have actually been you, asked me about iron condors. And this is why they called him Captain Condor. He was a influencer, I guess you'd call him, wannabe trader, whose whole method was entering iron condors at the close and then martingale, so a gambling strategy essentially, where if he lost, he would double his position size and double his position size every time he lost until he won again and then do it all again. And what somebody like that in a strategy like that will typically see is something like this, where, okay, they win 20%, win 20%, win 20%. You do that 5 times. And then on your 6th time, you lose 100%. So not perfect math, but around like an 80% win rate, and you're still in the negative or at 0. So a system like this requires near perfection to survive. What happened to him and all of his followers is they all ended up filing for bankruptcy on Christmas last year because I don't know if they actually filed for bankruptcy, but they all blew all their accounts by Christmas. All of their money was gone that they had ever made. And they had been making money for years straight. I mean, 2 or 3 years straight, of making consistent money. I was running iron condors when Joe Biden was president left and right and making good money because it made sense because the market traded sideways and a little bit up for so long, which is a very easy way to make money off of these. But it does require near perfection to survive. So I don't really like having my money tied up that way anymore. Not really my thing. So, and then the opposite scenario is this is what, a 40% win rate. So with a 40% win rate, if you lose at 20%, lose 20%, lose 20%, and then hit 100% and a 200% winner, that's plus 240%, 48% expectancy, and a 5 profit factor. So this is a lower win rate. A 40% win rate beats an 80% win rate when you do it right. That's why a lot of you guys are focusing on the wrong things. So we have one trader in specific. Let me see if he's in here. Made me really think of this. He's not in here now. Hopefully he watches the playback because he could use it. One trader in specific, though, sets his profit target at 20%, and he's in our zero DT room. And he sets his profit target at 20%, and he wins constantly, and he's barely breaking even. And that's because on all the ones that he's hitting 20% on, they're often moving 100%, 200%, 400%. So then the losses that I let go to 100% because I'm hitting those 200, 300, 400% returns, I don't mind a couple 100% losses. Those losses eat him alive, and all of his profits are suddenly gone, and he's in the negative. And it's because these ambiguous numbers of 20%, I'm gonna lock in a 20% return, are like, why? Like, what made you do that? If it's just because you like the number 20%, that's not a good reason. If it's because the chart was starting to putter out and you saw the VOLD was going negative for the first time today, and the ADD and the tick started clicking negative for the first times of the day, and your RSI was at 95 or something insane, and Trump is coming on the TV and starting to talk, okay, that's a great reason to cut at 20%. But if the reason you're cutting at 20% is just because it hit 20%, that's the same as setting a stop loss at 20% just because you don't want to lose 20%. It doesn't make sense. It's not going to be successful long term. I mean, maybe it will, but it'll require a lot of luck. And I do not encourage or trade off of luck. I think we had some talks about this in the chat earlier. So what to look for. So then what to look for when you want to hold a play longer. So for me and Manny actually May is kind of touching on exactly what we were talking about earlier. For me, I know charts well. I've been trading over 10 years. I can look at a chart and see, okay, this is probably going to keep going higher. For other people, they might look at a chart and it just looks like a Arabic or Chinese written down, and they have no idea what it's saying, right? So let's say this was our opening range line here, the top of it here, and a candle breaks over it, and this is where we'd be entering, right? And then right here is probably where a lot of people are closing because they're getting scared. And then this one pops up and pulls back here, and now you got even more people closing down here. And after theta burn for a couple more candles and time decay is coming off, and you're pulling back here, you're probably at about break even, honestly, here, just because the time's also passed. This is where I'm adding my second position size, and then it pops up here. I'm probably adding here again, and then it pops up here, and I might be looking to take profits here. But when you're seeing these higher highs coming, higher highs, higher highs, higher high, higher high, higher high, higher high, which the clear air indicator that I give everyone who's in zero DT anyways, should tell you when those higher highs are perpetually just printing over and over again. You really don't want to be looking for an exit there. But when it breaks a lower high or a lower low, then you want to start looking for an exit. So pullback, stay controlled. That's another reason with zero DTE, we've started giving the pullback entries, and breakouts hold. Volume expands, so looking for volume expansion. So if volume is increasing on each of these candles as they're going higher, then it's a good sign that it's a quality breakout that's going to keep going. The breakout holds, so if it would have broke out here and then failed here, that would be a sign to cut. But since it breaks out, pulls back, then holds, that's a sign to stick with it. And if the momentum started rebuilding, this candle here would be a sign of momentum rebuilding. After it rested here, then continuation becomes more likely, not guaranteed. Nothing's guaranteed. I feel like everybody wants guarantees around here. You're in the wrong business. So warning signs when momentum is no longer confirming would be, okay, we broke out. Let's just say this was the opening range, top of it here. We broke the opening range. We pulled back. Cool. We held it. We popped. Good. I might be adding here, to be honest with you, or right here when we hold it. But then we popped and then we come back down in the opening range. Okay, now I'm watching. What do I do? Okay, it opens here, pulls back, pops back up. I'm like, okay, we got a shot. Opens here, pops up, pulls back, and here I'm cutting for a small loss. And that small loss could be a 10% loss. It could be a 90% loss. It doesn't matter. That number that everybody's looking for, the magic number to set the stop loss at or take profit at, does not exist, at least not with a quality profitable strategy. If you're newer and you just want to protect capital at certain levels, I get it, and that's okay. But the goal should be to learn this over time, not just play off of those ambiguous numbers that don't really matter over and over again until you blow an account. All right, so I would be getting out here, probably be getting short when I saw this one here. So breakout immediately, popped up, kind of traded sideways, and then lost support. Price cannot reclaim key levels here, so this would be an attempted reclaim, attempted reclaim, attempted reclaim, fail, 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 boom. And the bounce weakens, selling expands, structure, not P&L, says exit. Structure, not P&L. I think that's the overall theme I'm trying to get to. Structure, not P&L. So everybody cares about P&L when they should be caring about structure. So one signal is not enough. Look for multiple warnings. So if you're in the chat, you know it is getting emotional in there the more new people I add because they're new. And holding winners is emotionally uncomfortable. And you hear me trying to shoot the stuff down, going, oh, I just hope this goes up. Oh, I'm hoping we have a good time with this one. I'm really hoping and holding, hoping and holding. I'm like, hope isn't a strategy. Please shut up. I try to be nice, but I do lose my patience often, just so you guys know. Fair warning. So fear says, I'm up, I'm gonna lose it, I gotta get out, I'm out. Process says, is the setup still working? And so you'll notice, I think almost everyone's in pit power plays. So pit power plays, you'll notice people, it's going up and they're like, yes, it's ripping, it's time, it's here. And they're getting all excited. Excitement is an emotion. And then it pulls back a little bit. Oh no, what do we do? It's down 20%. I'm down 20%. Do I sell it? Do I sell it? It's crashing. The price, oh no. Emotions, emotions, emotions. Like you really sound like, no offense, like you sound like little babies. And as I call you guys babysitters sometimes. That's my diss, my diss to the people who overwatch the price and under think about the process. And this is what I'm constantly asking, is the setup still working? So if the setup's still there, and I'll pull up an example of this to better show you within pit power plays at the end of this. But if the setup's still there, I'm not closing. So BMY turned positive for some people today, and they're like, oh my God, I'm up, I got to get out. So many people did this today. And I'm like, if that's what you want to do, you can. Like, I want you to build your confidence, so I'm fine with you taking profits early. But I'm going to do this part still. I'm going to take a little bit off the top because, yeah, it's a rocky market right now, and I want to take a little off the top because I got some profits. But the setup still looks good. It kind of looks like it's going to break out to new highs. And when that thing rips to, not saying it will, not a fortune teller, but let's just say it rips to 75 in the next few days, you guys are going to be like, oh, why didn't I hold that longer? Oh, why did I get out so soon? And the next time you might hold it too long thinking that's what happens every time. And it's like this system of emotions just keeps getting triggered in you to do silly stuff. And I don't recommend it. I want to talk you guys out of it. And I want to teach you guys how to be real traders and make real money and think like profitable traders. So the mindset shift, accept that you might have to give back some open profits. Big deal. Size small enough that you can tolerate normal pullbacks. Take partials when possible. So I usually don't enter a position all in one lot, and I usually don't exit a position all in one lot. Scalping, I might, but not with swing trades, that's for sure, and usually not even with day trades. Watch the chart. I don't look at my P&L. I don't even look at where the price is at for like people are like, we're down 20%. You guys are letting me know when you said that. I don't know. We're up 20%. Cool. Didn't know. For pit power play specifically, if I'm day trading, I'm much more locked in on this. But predefine the evidence that will make you exit, not the price. The evidence, not the price. All right. So hold until the evidence changes, not because fear appears. So letting winners run does not mean holding everything. It means you follow the setup. Don't let fear of losing green get you out. You take partial profits when your size allows. Leave a runner for the exceptional move and exit when the thesis or the structure breaks, not some random number hit. It does not mean holding every trade until expiration. It does not mean ignoring changing price action. It doesn't mean turning a winner into an unmanaged gamble. And it does not mean you should expect everyone to run to 400%. It means stop thinking in these percentage numbers. So the three contract ladder that I use this not only, I use this in dang near every trade I take. So I use this for zero DTE. I'm going to use it less with momentum. Um, but zero DTE, pit power plays, turtle trades, I'm using this always. So first contract, you might take profit at 50%. Second contract, you can let run for 75. Third contract, this is the one I'm not selling until price really tells me to sell it. So, we might be up 200, 300, 400%. If we're just up 400%, I'm just going to let it keep going until price starts hittering out and saying, get the heck out because of what the chart's telling me, not because we just hit 150%, hence the plus sign. And one contract still needs an exit plan. So before entry, you have to choose your exit logic. So is it a technical target on the underlying? So if you're exiting because it hits a price that makes sense because of the underlying stock, that's different than exiting because the option hit a percentage value you liked. A structure break, if it breaks under the ADMA, the 20 EMA, the opening range, or a certain support level, pre-planned trailing method after momentum confirms. So this is probably the simplest way, and that's why I teach this first to you guys. So with the 50% target, if you get to 50%, you don't take profits at 50%. You set a stop loss at 40% so that if it keeps going to 100%, you're still getting all the benefit of the upward move, but you're not risking any downward move or losing anything. Besides a little bit extra that you would hit. And a debit spread is always an option too. I'm going to do those probably next week as the talk or as the call lesson, whatever you want to call these. So a debit spread would be the other option to kind of help you set it and forget it and think about it a little less. So the question to ask yourself whenever you're exiting a trade, entering a trade, in a trade, am I exiting or entering? But really, am I exiting because the setup changed or because green makes me nervous? It's normal to feels a little bit uncomfortable, but if just a little bit of uncomfort is making it feel unbearable, then your position size is probably too large. So use these 5 questions to check. Is the setup still valid? Is price holding the breakout or key support? Is momentum volume still confirming? How much time remains? And is decay accelerating? And I actually don't really think about that much. But and can I pay myself and still keep a runner? So if you're at 200% profits, let's just say you had 3 contracts and you hit 200% on the first 2. So you entered for $100 and you got out $600, 100 per trade and the total 600. Then you'd be risking 100 with 400 in profit already banked. So who cares at that point? Let it run, especially if it just keeps running. Anyways, but the general lesson is that win rate gets all the attention. Sorry for tricking you guys by telling you my win rate, but it's valid. It is a thing. It does show that I'm not full of shit and I know what to pick, but it is not the edge. The edge is the expectancy. There are probably people with better win rates than me that have less profit factor. And profit factor is what proves the payoff. Expectancy is what builds the edge. Runners create immense upside. All right, so don't just take profits, manage your winners. All right, and with that, if you have any questions, I got one in the chat. Please drop them in the chat for me so I can assist. Okay, it's just my note taker actually in the chat. But yeah, feel free. And I'm going to give you guys an example. Let's use BMY because we are in that now, and that's a perfect example that this has been happening with. Cool, cool. Good on time. I got about 5 minutes, so I gotta get on my next call. Okay, so BMY here, ripped here, pulled back. Yeah, I'm trying to think when we got in this one. It's probably right around this little bounce here where it held support here and bounced a little bit up here. So somewhere in here around 65 bucks, I think we got it. And then it traded sideways. And when you're trading sideways with options, theta decay is making the value of the option go down, or especially when it hits 63. So at this point in time, the chat is wilding. Like people are canceling their memberships who just signed up for trials left and right. People are thinking I'm full of shit. And really, I have a hard time even trying to defend myself here because it's like if you really think that, you just have no clue what you're doing or talking about. And I'm here to help you if you want to learn. But if not, I don't know what to do for you. So, but notice this consolidation here. Let's see if I can draw. I don't usually draw in trading view, but why not? Just notice the consolidation though is pretty wild. It's a paintbrush. I get a here, perfect. Notice this. This means nothing. So the average range for this for BMY is probably a dollar or two. And so this thing has moved a dollar or two every single day since we got in. So what that means to me is it's really not moved at all. And as it's pushing up here on the top of this range, I'm seeing like, hell yes, we are about to fucking rip. And so I'm waiting for this baby to hit new all-time highs up here, or at least test these highs right here at 68. Now it got wicked out because I think those are post earnings highs, but most of the analyst price targets are well over $70. Um, and with stocks like BMY and what else? BAC and MET, these are all stocks that are going to do well when the rest of the market takes a dump, which it's starting to do right now, it seems. A lot of the regular winners, the Nvidias, the Teslas, are getting smacked down to earth, and that's when healthcare and banks are going to do much better. So this is a good example of where the inexperienced, ignorant trader is panicking down here, and I'm adding to my position because it's holding on to key support levels. Let's check this chat, see what I've got here. No questions on that. Any stocks you guys want me to look at real quick? I got 2 more minutes. Let me just click through the chat real quick because I know I appreciate Todd's sentiment in the chat there. So for Rosh, he was having a hard time understanding how I had a 9% return with a 90% win rate. And I think what I just explained explains why return and win rate are not associated with one another in any way. And when I was saying a 9% return, I was saying 9% return on $250,000 while only risking 1%, which is only $2,500. So if you take the return on the 2,500 of risk, it's actually a 1,500% return. But since you're risking only 1%, it's a 9% return because I wouldn't risk all of my portfolio on one single trade or one single strategy even. Some of my portfolios there to day trade, some of it's there to scalp, some of it's there for turtle trades, some's in spreads, some's in a single long option like pit power plays. Dude, Lee, if you didn't get out yesterday, I don't know what to tell you. I didn't actually look at the option price yesterday though, but that would have been the greatest dip I ever, Lee. I'm gonna pull up that example next, actually. Glad I found this group. Great experience so far. Awesome. Thank you for the support. Where can I get an affiliate link or should I submit leads? Submit them manually for now. I'm working on the affiliate link thing. I was using WOP, WHOP, but they're annoying. I'm trying not to. They take tons of fees. Somebody else asked that they're on a 14-day trial and they're not sure if that's enough time to feel comfortable. So is there an extension of the trial? Yeah, it's called paying for a month. But but not to be a dick, but essentially the trial is really just there so you can get to know us and see if we're the right fit. You know, it's not like a super expensive service. I have a mentor who charges $3,000 a month for a very similar amount of attention. So, uh, yes, it's just a little bit more money. I just pay for your first month, honestly. But I did switch the trial times up going forward in the future to be a little bit longer. So, and just talk to guys like Lee. Like Lee's sitting here saying, guys, I've been here for 5 years. I wouldn't stay if it didn't work. You know, so there's plenty of people who have been with me for 5 years. And that's really when we started advertising at first. And then we stopped advertising for years because I saw people getting hurt, being dumb, not understanding what I'm teaching right now. And so now the goal is not to just give you magical trades to multiply your accounts. That's great when I can do it, and I love to. But the goal is to teach you guys how to be smarter traders, investors, and money-making machines, not to just give you free money to print, you know? Uh, yes, yes, you can, Manny. I think there should be somewhere within Vision for you to request the clean air indicator. So you see these triangles here? These are the clear air indicator. And all this is saying is a really simple indicator. All it's saying is that this candle broke the high of this candle, or in this case, this candle broke the low of this candle. But when you're newer to trading, that's a good way to know of a time when you might want to start thinking about getting out. So with this Dr. Pepper trade, though, this is probably going to be one of our losing pit power play trades. And where the heck did we get in this baby? We've been in this one forever. I don't even know when we entered this. But let's just pretend like it was on this one here, maybe, because then we ripped to new highs, hit new highs, and we pulled back here. I would probably be getting right here. All right, so getting in close to where the price is now, but because options decay over time, that doesn't really show. Then I see it pull back further and further. And let's see if I can get some EMAs going here. I'm probably not gonna have time to set everything up. Anyways, so Lee is a madman who loves buying the dip. So he bought the dip here, and then he bought the dip here, and then we popped up here, and he might take some profits. And then we dipped again here, and he probably bought it again. And then we ripped here, and hopefully he took profits and made some good money. I'm still in the negative on this one. I'll probably take 100% loss, and I don't care because when you lose $2,500 after making 40,000, it's not that big of a deal. And so, yeah, the clear air indicator, I think you just got to go on vision. You got 1 minute. And if you just go into sniper pit, it should be somewhere for you, Lee. Okay, I'm glad we're losing together, Lee, on that one. I thought you might have pulled off the greatest dip buy in history and actually cleaned that baby out in the last 2 days when it was ripping. You should have. Um, well, wherever it is. There's somewhere to request it in here. If not, just message me, Manny, and I'll get you that. All right, guys. I got a jet. Hope this was helpful. Drop any extra questions in the chat. I'll send the recording out soon. And appreciate you guys hanging out with me. Somebody asked what does EMA mean? It is exponential moving average. I guess that's the topic for another day, but definitely something you want to learn if you are in this room.